Hey everybody, this is Jim at SP500chart.com. It's Sunday afternoon and we're going to take a look at what happened this past week. And we got some news on Friday, kind of what we thought would happen. Before we talk about any of this, however, I need to remind you as always that the website and the video are for educational purposes only, and nothing stated at the site or in this video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. I am not a licensed financial professional. I'm just a guy who draws lines on charts. So let's take a look. Well, we had some a little bit of interesting events taking place this week. In review, we're just really going to look at this section of the chart right here, but I want it to be in context of this green channel. We started to slide underneath and to the right of this line of support. And again, I'll reiterate that this is not I don't know that this is a perfect line. We may be redrawing this thing at some point. But I'm going to leave it where it is right now because it seems to be working as one would expect for a line of support that sort of started to break down, never by more than 1%, but it's behaving that way. And what I mean by that is we started to work ourselves to the right of this line this week, and we did so in a symmetrical triangle. And then late on Thursday, we got a little hint that maybe this triangle was going to break to the upside. Right there, there's that little hint. And at that point, we knew to expect a target just from this blue triangle, a target of 31.20. And we close at 31.19.74. That's a hit. That is a definite strong and successful call of the move above this small area of consolidation. Keep in mind again that this is a very small pattern, and the target was less than 1%. The target was just a little less than 1% above this thing, so it's kind of not really a tradable thing if you use that 1% rule. But the main thing that happened this past week is, I had mentioned that I was looking for a close above 3,100 before I was willing to say, yes, indeed, we are technically significantly above this purple line. You might say, well, okay, so we're above a purple line, but this isn't just any old purple line. This is a purple line in a massive inverted head and shoulders pattern, albeit a complex right shoulder and a sort of a complex left shoulder as well. Now we're over this line, and with that, conditionally, that initiates a target not only of 33.70 that we had from this inverted head and shoulders back here, that's right in the middle of that bigger pattern, but now we have a target way up there at about, I think it's about 38.40. Let's just call 38.40. I've been saying 38.50, but not knowing for sure when you're going to break out, and it's a rising line. 38.40. That is our second target that is significantly higher than that 33.70. So I think we've got a good pattern behind us that tells us 33.70. We are more than halfway there now with Friday's move to that 33.70, but we're probably less than 10% on our way to that 38.40 if you judge it from this neckline right here. So what's the condition? Well, the condition is very simple. The condition is that with such a large pattern, and it's deep and it's wide, with such a large pattern, it's going to take significant time before we can expect to see the target of that pattern. It could be more than 2 years. And with that, there's always the possibility that something significant happens on the world stage that actually is significant enough to change things and to create conditions that the market is unaware of right now. Remember, the markets are all about psychology. They reveal investor sentiment. And the sentiment right now is still very bullish. But within 2 years, who knows? You just don't know. But nonetheless, 38.40, that's the new target. But instead of getting too excited about that at this point in time, what I would rather do is still continue to follow this chart day by day if you're a daily subscriber, or week by week if you are not. And let's get the first thing done first, and that is, first thing is we want to get up to that 33.70 target. I'm trying to bring that, it's back off to the left of the page here. So anyway, that's the target that I think we ought to kind of centralize our thinking on right now. Again, this little triangle worked its magic. That gave us the target there of 31.20. We pretty much made that. Also, if you'll notice, we did not get over this line that we worked our way to the right of, and I would not expect us to. I'm not saying it's impossible, but I would not expect that. However, this line is rising at a fairly good pitch, and enough to certainly allow us to stay underneath it while everything that we have in the way of a significant bullish target is still met. So, it was a great week. There you have it. The two things that happened is, and if you were not a daily subscriber, you missed these things, but we recognized this triangle. We saw the beginning of the breakout and made that call on Thursday's video. And then on Friday, we got that breakout. And of course, all of our trend lines at this point, even the ones that we got underneath, they still appear to all be working. So it was a great week. The big news, in addition to 33.70, we got 38.40 to look forward to. And that, my friends, is a significant target. Again, it's almost an insane target. So with that, I want to say we still watch it extremely closely. We look for any signs that this thing fails, because about 20 to 25% of inverted head and shoulders patterns are going to fail. And that's just a fact of life. So we have to keep watching it for any signs of failure. The first sign at this point would be is we come crashing down underneath this neckline. I think that would probably be at this point the only thing that would tell us that it's in the process of failing. If we fall back down to the 3060s, that's perfectly normal. Matter of fact, at some point I think we probably will. But it would be if we really get slammed down underneath that neckline, then we have to reconsider things. I will remind you, when we look on the daily chart and we look at our other inverted head and shoulders patterns, this one right here, we came down under the neckline, but we gathered strength and found support way, way, way before we got down to the lowest point in that pattern. And since that was such an aggressive and sudden move from the 2350 area up to 29, about 2950, in other words, that was about a 600-point gain in 5 months. You got to give some of that back up. So anyway, guys, great week. I hope you enjoyed it. I hope you continue to enjoy what we do here. And there is your weekly review for the week ending November 15th, 2019. Thanks for taking time out of your weekend to watch this. And as always, thanks for your very kind support. Take care.